The AI bubble is going to burst, and I have the receipts. Let's get into it. On June 10th, Anthropic wrote a letter to US senators complaining that a Chinese company was using a technique known as knowledge distillation to steal their IP. It's ironic, really. AI tried to make humans obsolete by appropriating our creations. But now, AI models are making each other obsolete by stealing from each other. More importantly, it turns out that all the CapEx US companies are pouring into training frontier models, that value can be extracted virtually for free. Anthropic complained that 24,000 fraudulent accounts had been registered. The output from those accounts was used to train Chinese open-weight models at a fraction of the cost. Essentially, China is converting big tech's CapEx into a free download. That's potentially disastrous for investors who bought into the hyperscaler hype and semiconductor build-out narrative. This week, a Chinese AI lab released Kimi K3, a model which, according to artificial analysis benchmarks, beats America's most frontier models on coding tasks and almost beats them on everything else too. Unlike American AI labs, Chinese labs are releasing open-weight models. That means the billions of floating point numbers that make up the core of the trained AI model were released too. That means there's no black box for American big tech to sit behind when it comes to AI. Soon, anybody will be able to download these weights and start training their own frontier model, customized for whatever tasks they perform. Alex Karp, CEO of Palantir, said it best when he explained in a CNBC interview that corporations using externally hosted models are exposing what he called their business weights and alpha. What he means by that is that if you're running a business using AI, then you're providing training data that could eventually be used to replace your business. That amounts to paying for tokens twice, first in cash, and secondly, with your business knowledge. And let's not ignore the upfront cost, because AI labs have been consistently increasing their pricing throughout 2026. So businesses are pivoting towards downloading Chinese open-weight models and hosting them on cloud servers they control, so that they can isolate their data behind encryption. And there's other advantages too. Open-weight models are a starting point. They can be retrained using company-specific knowledge and best practices. As things stand currently, I see the future as open-weight models, downloaded virtually for free and then retrained to intensify their skills in the areas you need. Big tech has run out of growth ideas. There's no new iPhone, App Store, or search platform for them to build. When companies reach maturity, this is exactly what happens. They run out of high-margin, high-growth opportunities and start increasing CapEx, hoping to find new areas to grow into. But that's a real problem for the US stock market. Big tech companies now make up over a third of the S&P 500, but are still priced like young, high-margin, high-growth companies. Given that AI hyperscaling is failing as a business model against Chinese open-weight models, a substantial repricing in big tech growth could soon be on the horizon. In my opinion, it's time to admit defeat with the AI race and move on to new opportunities. And they do exist if you pay attention to history. So far in this video, I've been skeptical about AI as a business model. The parallels with the dot-com bubble are obvious. AI alone isn't particularly profitable, just like the internet alone wasn't profitable. The margins are just too low. It's now clear that AI is a new form of interchangeable utility, just like broadband, water, or electricity. Instead, what made the internet profitable was software. Well-designed software allowed internet users to exchange value and information in new and more effective ways. I believe that model-agnostic software, and more specifically, unimaginably powerful user interfaces, will do the same for AI. And the companies that build those software platforms will become the next Amazon and the next Google. An early example of this is Palantir. Just look at their revenue growth. There's huge profitability in AI, provided companies stop obsessing over low-margin hardware and start thinking about the software that makes it useful. And the United States is great at building software. More importantly, they have a resilient justice system full of checks and balances that, for the most part, ensure trust. That's something US companies can lean on going forward, selling trust and data security. Meanwhile, companies in lower-cost countries like China are likely to focus on non-private or non-mission critical use cases for AI. Ultimately, there's a potential market for everyone when it comes to AI, so this doesn't need to be a hardware race. That's it for this video. For more content like this, hit like and subscribe. See you next time.